Good morning friends, welcome to Sharekhan pre-market view. Indian markets continue to trade on the positive side, and yesterday Sensex put on over 140 points gain in spite of poor results by HUL which was under pressure. Nifty also put on a very good gain, and now markets are just 1% away from the all-time highs that they had hit. Going back to the US market, yesterday US markets were closed because of the Martin Luther Day. The cues from Asian markets are extremely positive. We just had GDP data number coming in from China, and they beat the mean estimate of 7.2%. So that is extremely positive. And overall, if you look at the Asian markets, they are trading in green. The cues from SGX Nifty is again positive. It is indicating a 12 points gap up opening. If you look at the flows, flows continues to be robust. Yesterday FI pumped in close to 434 crore in the cash market. They were buyers, small buyers in the index future of 56 crore, whereas DIs were seller to the tune of 237 crore. After a gap up opening by 12 points, how Nifty would trade throughout the day?
Good morning friends, let's have a view on derivatives. Despite yesterday's negative cues and sharp sell-out in Chinese market, we have seen Nifty opening higher of a gap up opening of around 20 to 30 odd points, taking positive cues from the US markets, and later on it went higher and closed in the positive territory of around 0.46% at 8574.10. Now the open interest terms, we have seen a minor build-up of around 0.34%, that is 72,000 shares were added in open interest, and with increase in cost of carry, that is premium have increased from around 18 odd points to 21 odd points, indicating some kind of long positions was been added in yesterday's trading session. Now the interesting part was the put call ratio. Despite some kind of flattish movement, we have seen significant sharp rise in put call ratio, which have gone past the resistance of around 1.24. From the last couple of years, we have seen Nifty taking resistance around 1.24 odd levels in the put call ratio and seeing some kind of selling pressure over there. But however, we have managed to close above that resistance level of 1.24, and in yesterday's trade we have seen a sharp increase from 1.23 to 1.27 levels, which is a positive sign going forward for the market. The Indian volatility index was more or less same at around 17.65 odd levels. Now the options activity, we have seen hardly any build-up in the call option. The call writers have been quite skeptical in current market scenario, and they don't want to take any risk of writing at the money or slightly out of the money call options. So they have been now going a bit on the higher side, that is 8,900 call option, which has seen maximum build-up in yesterday's trading session of around 20 odd %. However, majority of the at the money strike price and slightly in the money have seen some kind of unwinding or minor build-up in yesterday's trading session. While in put option, we continue to see significant amount of build-up in at the money and slightly out of the money strike price. 8,500, 8,400 is quite active in last 2 to 3 trading sessions. Since we have seen market rising up around more than 3% in before 3 to 4 odd trading session. Since then we have seen 8,400 becoming quite active and has been seeing significant amount of build-up over there. And simultaneously at the money option of 8,600 strike price have started becoming a bit active, and we feel majority of the build-up over there is on the shorter side, where the stronger end of the market has been shorting put options in anticipation of the further rally in the market going forward. There is one securities in ban period for today's trade, that is HDIL. On FIS terms, in index futures, not much of activity was observed in yesterday's trading session. There were net buyers of only 56 odd crores. In index options, there were net sellers of 654 crores. While in stock futures, they continue to be net buyers of 92 crores in last couple of trading sessions, and with buying in cash market segment of around 1100-1200 crores, which is a positive sign. So we may continue to see good amount of stock specific movements going ahead. In stock options, there were net sellers of only 4 odd crores. 5 days VWAP stands at 8480 with a lower range at 8450, 8480, and higher range is at 8700, which is the highest in terms of open interest. SGX Nifty is trading positive by around 14 odd points at around 8600. That concludes from my side. Thank you.
Friends, let's look at some of the actionable ideas for the day. First, the trading idea. Now, urea manufacturers get a big respite government is considering deregulating MRP of urea, which was fixed at 5360, an increase of just 16.5% since 2000, which is also below the cost of manufacturing for urea producer. Now the new considerations are scrapping of the import duty, which is around 5% to check the subsidy leak, and also deregulating prices by hiking prices by 20% for each year for the next 3 consecutive years. Now this is positive for most of the urea manufacturers, and it would have a rub off positive impact on Tata Chemical, which one can long with stop loss of 438 for potential upside of 462 and over that 467. Also RCF could be seen under action. The CNP 69, one can long it with stop loss of 67.5 for potential upside of 72 and above that at 74. Now, in a major setback for Vedanta Group, Moody's has revised Vedanta's credit outlook to negative. This would have a negative impact on a couple of its subsidiary companies, which is K in India. So one can short K in India with stop loss of 239 for potential downside of 228 and below that at 225. Also Sesa Sterlite could be seen under pressure, and one can short Sesa with stop loss of 197 for potential downside of 185 and below that at 181. Also, as per media reports, MRF is in talks to buy Kesoram's tire unit for 2200 crore rupees. Now this could be extremely positive news for Kesoram, and one can long Kesoram with stop loss of 112 for potential upside target of 119 and 122. Moving on to the news section, Muthoot Finance has received tax demand from the service tax desk to the tune of 153 crore for certain securitized transaction with the banks. While the management is looking for a legal remedy for the tax demand that it has received, but this is sentimentally negative news for Muthoot. Now, as per UN report, India's growth will reach close to 6.3% in 2016. So an upgrade coming in from the UN. Also, Telecom Commission has approved a higher price for the 2100 megahertz band at rupees 3700 crore. Now, this is 36% higher than the price recommended by TRAI, and negative for major telecom operators. Also, Delhi High Court had asked Glenmark to stop making linseed drugs. Moving on, private airline opposes move to amend the 520 rule. Now, currently domestic airlines are not allowed to fly on international route unless and until they have 20 aircraft fleet and have completed 5 years of operation. Also, Israel-based BioLite Life Science, in which Dilip Sangvi, which is owner of the Sun Pharma Group, holds 21.45% stake, is gearing up its India foray in the next few months. It is learned this company basically specializes in cancer and glaucoma diagnostic products. Also, as per media reports, wind power producers may get 10 years tax holiday. And the United Forum of Bank Unions have put off their 4-day strike and they have put it on hold. If you look at the global commodity prices, they have been under pressure. However, we are clear-cut seeing with galvanized steel producers actually cutting the prices by 5%. This is ideally to pass on the benefit of the lower prices to their consumer. Also, the global coffee prices are under pressure. They have hit 10-month low, and they continue to slide downward. The composite index was down about close to 3% in the early month of January and is now quoting close to 149.18 cents a pound on Friday. Last week, led by weak demand globally and high supply, the cotton prices have declined. In January 2015, the prices registered and went below 31,000 per candy of 356 kg. Now, during the month of January itself, these prices have gone down by 2,500 rupees per candy, which is close to 8%. On the back of steep fall in the crude prices, international rating agency Moody's has changed its outlook on the domestic airline industry to positive from stable. So, airline stocks could see some sort of positive action in India as well. Friends, moving on to important results which are likely to be announced today, we have Kotak Bank. The estimated PAT here is close to 766.3 crore. South Indian Bank, again the estimate here is close to 116 crore. And Rallis India from the agrochemical space, the estimated PAT here is close to 32.3 crore. If you look at the watch list which we have created for the day, the stock we continue to like with positive bias from intraday trading point of view. We have Apollo Hospital, Federal Bank and Larsen & Toubro. And stocks which one can short from intraday perspective, we have India Cement, Hero MotoCorp and M&M Finance. Moving on to the stocks which we like from long-term investment point of view, here we have picked L&T, Yes Bank, Tata Motor, DVR, Infosys and Max India. Friends, that's all we have in today's trading session. Thank you.